Welcome back to Boni's Life, where we decode the crypto chaos so you don't have to. I'm Boni, and if you've been living under a rock this week, let me catch you up. Bitcoin just hit $123,153. Yes, you heard that right. Before pulling back faster than my enthusiasm for a Monday morning workout. But here's the thing, and this is why you need to stick around for the next 30 minutes. What happened after that peak tells us everything about where we're heading next. Today, I've decided to create this episode earlier as I will be traveling from Asia. Now, before we dive into the technical wizardry that would make even Gandalf jealous, let me ask you something. How many of you saw that $123,000 peak and thought, this is it, we're going to the moon, only to watch it drop faster than your New Year's resolutions? Don't worry, I won't judge. We've all been there. But today I'm going to show you exactly why that pullback might be the best thing that could have happened to your portfolio. See, while everyone was celebrating new all-time highs, the smart money was already positioning for what comes next. And what comes next, my friends, is what I like to call the great crypto sorting, where the wheat gets separated from the chaff, and fortunes are either made or lost based on one simple thing: understanding the game. We're sitting on a $3.8 trillion market right now. To put that in perspective, that's bigger than the entire GDP of Germany. But here's what's fascinating, and this is where it gets really interesting. This isn't just about Bitcoin anymore. We're witnessing the birth of what I call Altcoin Season 2.0. And if you're not paying attention, you're missing the biggest opportunity since Bitcoin was trading for the price of a pizza. Look at Ethereum. While Bitcoin was having its little temper tantrum, ETH quietly gained over 30% in 7 days. 30%. That's not a coincidence, folks. That's institutional money rotating from Bitcoin into altcoins. And it's happening for reasons that most people completely miss. But before we get into the technical analysis that's going to blow your mind, let's talk about the elephant in the room. Or should I say the elephant in Congress? Because what happened in Washington this week didn't just change the crypto game. It rewrote the entire rulebook. The US House of Representatives just passed not one, not two, but 3 major crypto bills. The Genius Act for stablecoins passed 308 to 122. That's bipartisan support that would make a pizza-topping poll jealous. The Clarity Act passed 294 to 134. And they even banned central bank digital currencies. Now, I know what you're thinking. Boni, this sounds like boring political stuff. But here's why this matters to your wallet. These bills just legitimized a multi-trillion-dollar industry. We're talking about regulatory clarity that institutional investors have been waiting for since Bitcoin was just a white paper. And when institutions get clarity, they don't just dip their toes in the water, they cannonball into the deep end. Speaking of institutions, let me share some numbers that will make your head spin. Last week, crypto ETFs saw $4 billion in inflows. $4 billion. That's the highest weekly inflow in 2025. Bitcoin ETFs alone had a single day with $1.18 billion in inflows. To put that in perspective, that's more money flowing into Bitcoin in one day than most countries spend on their entire military budget. But here's where it gets really interesting, and this is something most analysts are completely missing. While everyone's focused on these big institutional numbers, there's a technical pattern forming that could either send us to new highs or create the buying opportunity of the decade. Let me show you what I'm seeing on the Bitcoin chart and why this pattern has me more excited than a kid in a candy store. We've got what's called a head and shoulders formation developing. Now, before you start panicking, let me explain why this might actually be bullish. The head and shoulders pattern is typically bearish. But, and this is a big but, it's not complete yet. We have the left shoulder from our previous highs, the head at 123,153. And now we're forming the right shoulder. But here's the kicker. The neckline hasn't been broken. We're sitting right at the critical support level of $118,000. And the volume profile tells a completely different story than what the pattern suggests. Look at this volume data. During the sell-off from $123,000, we didn't see the massive volume you'd expect from a true reversal. Instead, we saw what I call weak hands shaking out. The institutional buyers, they're still here, still accumulating, still building positions for what comes next. Now, let me share with you the technical triggers I'm watching for the next 24 to 48 hours, because this is where fortunes are made or lost. For Bitcoin, I'm watching 3 critical levels. First, if we break above $120,500 with volume, that's your signal that the bulls are back in control. We're looking at targets of $125,000 and potentially $130,000. Second, if we hold above $118,000, which is where we are right now, we're likely to see continued consolidation before the next move higher. But third, and this is important, if we break below $117,500 with conviction, that completes the head and shoulders pattern. And we could see a move down to $115,000 or even $112,000. But here's what's fascinating about this setup and why I'm actually more bullish now than I was at $123,000. The market is giving us a gift. It's giving us a chance to accumulate at better prices before the next leg up. And while Bitcoin is consolidating, the altcoin party is just getting started. Ethereum isn't just outperforming Bitcoin. It's leading a charge that's reminiscent of 2017. But with one crucial difference, this time we have institutional backing. Ethereum broke above $3,500 this week. And that's not just a number. That's a psychological barrier that's been holding us back for months. The RSI is showing bullish divergence. The MACD is crossing over. And the ETH-BTC ratio is telling us that smart money is rotating into Ethereum for the next phase of this bull market. But Ethereum isn't the only star of the show. Let me tell you about some moves that have been absolutely mind-blowing. XRP surged 26% and is approaching its all-time high of $3.60. But here's the real shocker. Stellar XLM rocketed over 100% in just a few days. 100%. Now, I'm not saying you should FOMO into these moves. Never chase pumps. That's rule number 1. But what I am saying is that these moves are telling us something important about market structure. The altcoin season index hit 36 out of 100. That might not sound impressive, but here's the thing. We've only seen this level once in the past 90 days. This is the early stage of altcoin season, not the end. And if history is any guide, we're just getting warmed up. Now, let me talk about something that most people are completely ignoring, but it's absolutely crucial for understanding where we're headed next. The global economic backdrop that's driving all of this. The June CPI data came in at 2.7%, higher than expected. Now, traditional thinking would say that's bad for crypto because it means the Fed might keep rates higher for longer. But here's what the traditional thinking gets wrong. Crypto isn't just a risk asset anymore. It's becoming a hedge against monetary debasement. The probability of a Fed rate cut in July dropped to just 2.6%. But here's the fascinating part. Crypto markets initially sold off on this news, then recovered within 24 hours. That's not the behavior of a speculative bubble. That's the behavior of a maturing asset class that's finding its footing as a legitimate store of value. But the real story isn't just about Fed policy. It's about geopolitical events that are reshaping the entire financial landscape. President Trump's threat of 100% tariffs on Russia sent shock waves through global markets, and crypto wasn't immune. We saw $150 billion wiped off the crypto market cap in a matter of hours. But here's what's remarkable. The recovery was swift and decisive. Within 48 hours, we were back to 80% of pre-announcement levels. This tells us something crucial about the current market structure. Yes, crypto still reacts to geopolitical events, but the recovery patterns are getting stronger and faster. That's institutional money providing a floor, and it's a sign of market maturation that most people are missing. Now, I'd be remiss if I didn't address the elephant in the room. Crypto security? We've seen $2.17 billion stolen in crypto so far in 2025, led by the massive $1.5 billion Bybit hack. That's a lot of money, and it's a reminder that this space still has risks. But here's the perspective that's important. Traditional financial systems lose hundreds of billions to fraud every year. The difference is that crypto losses are transparent and trackable. And more importantly, each major hack leads to better security practices across the industry. The response to these security breaches has been swift and comprehensive. Major exchanges have implemented multi-signature wallets, insurance funds, and proof of reserves. The industry is learning, adapting, and becoming more secure with each challenge. Now, let me get to what you really want to know. The trading strategies for the next 7 days. Because understanding the market is one thing, but making money from that understanding is what really matters. For scalpers and day traders, here's what I'm watching. Bitcoin needs to break above $119,500 with volume for a scalp to $120,200. Your stop loss should be tight at $118,800, and you're looking for a quick 1 to 2% move. Don't get greedy, take profits and move on. For swing traders, the setup is even more interesting. We're in a range between $115,000 and $125,000. Buy the bottom of the range, sell the top, and use a 2% portfolio risk per trade. If we break out of this range in either direction, that's your signal for the next major move. For Ethereum, I'm watching the $3,400 to $3,500 range, a break above $3,500 with volume targets $3,800 and potentially $4,000. The risk reward here is excellent, especially given the altcoin season dynamics we're seeing. But here's the most important part, and this is where most traders fail. Risk management isn't just about stop losses, it's about position sizing, diversification, and understanding that no single trade will make or break you. For long-term investors, I'm recommending a balanced approach. 50% Bitcoin for stability and a store of value, 30% Ethereum for growth and ecosystem exposure, and 20% in carefully selected altcoins that benefit from the current regulatory clarity and institutional adoption trends. My long-term targets haven't changed. Bitcoin to $180,000 within 12 months, Ethereum to $7,000 in this cycle, and selected altcoins with 5 to 10x potential as the ecosystem matures. But remember, these are targets, not guarantees. The crypto market is still volatile, still unpredictable, and still capable of surprising even the most experienced traders. Speaking of risks, let me give you my current risk assessment. Technical risks are medium at 6 out of 10. The head and shoulders pattern is concerning but not confirmed. Fundamental risks are medium at 5.5 out of 10. Regulatory clarity is improving, but geopolitical tensions remain. Market structure risks are medium high at 6.3 out of 10. We're still correlated with traditional markets during stress periods. The key is to stay informed, stay disciplined, and never risk more than you can afford to lose. So, what's my outlook for the next 7 days? I give us a 35% chance of breaking above $125,000, a 25% chance of dropping below $115,000, and a 40% chance of continued range-bound trading. The most likely scenario is consolidation before the next major move. But here's what I'm most excited about and why I think the next few months could be absolutely explosive for crypto. We're at the intersection of regulatory clarity, institutional adoption, and technical setups that create once-in-a-cycle opportunities. The regulatory framework is in place. Institutions are allocating capital at record levels. The technology is maturing, and the global economic backdrop is creating demand for alternative stores of value. This isn't just another crypto cycle. This is the cycle where crypto goes mainstream, where your grandmother starts asking about Bitcoin, where Fortune 500 companies add crypto to their balance sheets as a matter of course, not as a speculative bet. We're still early. Despite all the progress, despite the $3.8 trillion market cap, despite the institutional adoption, we're still in the early stages of a technology revolution that will reshape finance as we know it. The question isn't whether crypto will succeed. That question has been answered. The question is whether you'll be positioned to benefit from that success. So here's what I want you to do. First, if this analysis has been helpful, smash that like button and subscribe to Boni's Life. We're building a community of informed crypto investors, and I want you to be part of it. Second, share this video with someone who needs to understand what's really happening in crypto right now. The mainstream media is still getting it wrong, and your friends and family deserve better information. Third, let me know in the comments what you think about the current market setup. Are you bullish or bearish? What are you watching? What questions do you have? I read every comment, and your feedback helps me create better content for this community. Next week, I'll be diving deep into the altcoin opportunities that most people are missing. We'll look at specific projects that could benefit from the regulatory clarity we just received, and I'll share my research on some under-the-radar gems that could be the next big winners. Until then, keep your eyes on those key levels I mentioned. $120,500 for the bullish breakout, $118,000 for continued consolidation, and $117,500 for the bearish scenario. The market will tell us which path it wants to take. Remember, in crypto, fortunes are made by those who understand the game, not by those who simply hope for the best. Stay informed, stay disciplined, and most importantly, stay tuned to Boni's Life for the analysis you need to navigate this incredible market. This has been Boni, and I'll see you in the next one. Until then, keep stacking, keep learning, and keep living your best crypto life.